Hey everybody, Chuck Barone here. Thursday, December 22nd, 2022. We are winding this week and year down really fast. Wow, it's going to be Christmas here any second. As always, we want to welcome you guys to the show. Thank you for your support. What you guys do every day to keep us going here really is, we can't tell you guys how much it's appreciated. You guys are the key to all of it. And we're grateful for your support every day. The markets today, kind of just a not much happening kind of day. The stock market actually down, started out, looked like it was going to have kind of a reasonable day. Futures were up earlier this morning. But here comes economic data. Now this is kind of a weird thing where good news is bad because GDP gets revised upward. Unemployment claims come in pretty strong, good employment looks strong. And the market reacts like that's just terrible news. And in essence it is, because, we all know the Fed is trying to engineer this recession. They will ultimately get that done. The data we got today was the reason the market was sour, because it shows the Fed still has a lot of work to do. Of course, stock market's hoping we're going to go back down to zero rates and stay there forever. This is a sign that that's not likely to happen soon, and I don't think it'll ever happen again. The bond market today, basically a flat day in the market. The 10-year basically unchanged at 3.67%. The 2-year up 6 basis points today, 4.28%. Bond market this market right now is so sensitive to any little piece of data that could signify the Fed. Are they going to keep raising? How high? How long? That's what the market's focused on. So the data gets interpreted in weird kind of ways now. Not a great time to be in this market, guys. Also flat today, the dollar basically unchanged, sitting at 104.44 on the, or 41 on the dollar index. Nothing much happening there. Metals today, for some reason, having a little bit of a sell-off. You got gold breaking under $1,800 per ounce, down about 22 bucks at $1,793 per ounce. Silver down 42 cents at $23.63. So both of those are kind of a bummer to me, especially at chart readers, right? So you got silver breaking back down under 24. You got gold breaking back down under 1,800. Now, I don't really think either one of those are going to stay there for very long. But it would have been a sign of strength if they could have held those support numbers. Also, oil today basically flat. West Texas Intermediate, $78.24. Natural gas continuing its crazy roller coaster ride, down 5% at 505 for their million BTU. Natural gas was up almost to 9.5. So sitting here at 5, that's a 40-something% decline. I don't see that being reflected in my gas bill this month. Oil kind of can't even it was in that trough of between $80 and $85 for several months. Now it can't even get back up to $80. These markets, obviously they're susceptible to weird data. Nothing's trading the way it should be on profits and prospects for business. Now it's all about the wars, interest rates, Chinese COVID protocols, and on with crazy nonsense. Bitcoin today basically also flat, down around $4, sitting at 16,792. We all saw that this Sam Bankman fraud guy got brought back to the U.S., $250 million bail, and he gets house arrest. He gets to stay at mom and dad's house in Palo Alto. I guess white-collar crime is a lot different, He gets to go live in a beautiful mansion with his wealthy parents. I guess they're both Stanford professors. And that's how he gets to spend his time before his trial. In news you guys need today, the reason this market was moving the way it did, GDP surprised today. The third quarter revised upward, surprisingly, to 3.2% growth in the third quarter, up from 2.9. And that 2.9 was also revised higher. I think initially it was around 2.7. And that's kind of interesting because the GDP Now tracker the Atlanta Federal Reserve Bank uses says our fourth quarter growth will be 2.7%, the same that initially came out for third quarter. These GDP numbers, I think, again, the way the Fed tracks this stuff is a little bit weird. But I think that these numbers still show the economy has some strength to it. Whether you believe these numbers are accurate or fudged up a little bit, I really got to say that this recession that I was pretty certain we were in, especially, June, July, as we were getting the show started here, it's kind of more like depending on what type of business you're in, are you in recession or not? It seems like retail's going okay, except for maybe car sales. Mortgage, real estate, not doing so great, but it seems like banking and, construction and house prices are holding up. And, so it seems like a lot is going good in this economy. We kind of always want to be focused on the negative for some reason. I laugh because everybody, when they hear these GDP numbers, goes, that's bullshit, blah, 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 the government lies, blah, blah, blah. But if the government had come out and said it's down 3.2%, everybody believes that one. So only the negative is true, right? Or a reasonable facsimile of the truth, and the positive is always just bullshit. Anyway, so GDP, continuing strength. That's a negative to this market because the Federal Reserve needs a recession to bring this inflation down. The slowdown we've experienced in the economy right now, up to now, has brought it down from the over 9% it was down to 7.1. We'll likely see that start to get into the sixes as we turn the calendar to 2023. So the Fed has a lot of work to still do, raising rates, and the economy is showing surprising resilience in the face of those rate increases. Also the news today, jobless claims came in. They were expecting 240,000. They got 216. The job market's strong. If it wasn't, these jobless claims would be higher, guys. So jobs are still out there. They're saying 1.7 jobs for every person who wants a job. So this gives the Fed a lot of flexibility as far as how they want to manage the rate increases. They can go big, they can go small. I think that the economy is so far surprisingly resilient in the face of those increases. I don't know how long that's going to hold up. We'll see. But as it stands right now, economy moving along and consumer sentiment rocketing, highest in 6 months. Consumers feeling like inflation is going to be lower next year. Consumers feeling like their personal financial status is okay. Feeling like they have money to spend. Feeling like their job prospects are good. They're for continued or new employment. So go figure, consumers. Now I got to admit, being in the mortgage business, it's a good thing they weren't surveying me because, my views on the economy might be a little bit more negative, but this stuff all strong signs for the economy here in the country. On the other side of the flip side of the coin, the Federal Reserve is fighting this inflation, going crazy, ready to damage the economy if they have to get this inflation back down. Now, there's two sides to money, though, right? You got the monetary policy, which is what the Federal Reserve does. And then you got the fiscal policy, which is what Congress and the president do, right? So they get this budget. Now, Congress just passed a $1.7 trillion spending bill. It's supposed to fund the government through next September. This is not, they have to fund the government. We get that. But when you're throwing these numbers around, it's not going to be good. So you got the monetary policy tightening, you got fiscal policy loose. You need to get those two in sync before you're going to get this inflation under control. I just don't see that happening. Maybe when you get the new Republican House in January, They can put the brakes on some of this spending, but they all agree to this bill. It looks like it's going to pass. I guess there's some haggling, horse trading back and forth, but it looks like it's going to come in around $1.7 trillion. I don't know how that's going to be helpful in our inflation fight. That's really it, guys. On a private note, nothing to do with finance or the stock market or getting wealthy or wealthier at least. But a lot of you guys are getting ready to travel for Christmas, go visit family. Even those of you who are not going to be traveling, please be very, very extra careful this weekend. We know we got this giant storm coming. It's going to bring some shockingly low temperatures. Take precautions. Try to stay, I know everybody's going to be out and about with Christmas happening, right? They're going to be trying to play, my Bills are playing in Chicago. They're saying it could be wind chill minus 20 below at the kickoff of that game. So if you're going to be traveling, even if you're not, please take some precautions. Be careful especially if you're in the Midwest or you're in the Northeast where this thing's going to be heading. Be extra cautious this week. Do everything you can do to not get caught in this cold weather. When temperatures are that low, they're very, very dangerous. Take care and take care of each other. Tomorrow we'll wrap this crazy week up. Hopefully it'll be a nice, tidy, quiet day. I seriously doubt it, but we'll see. Time to get out there now, do a little bit of mauling. I got to finish up my Christmas shopping. I'm going to take care of the boss, my wife, Lisa. Anyway, guys, we'll be back again tomorrow to wrap everything up. Until we talk then, take care. Thanks.